Good morning, everyone. This is JJ Risha with Pismo Ventures, and I have with me today the esteemed David Friedman. David is the president of Orange County Tecos Angels, and he's got for us today the perfect pitching and the message map. And I will let him introduce himself in a second. I just want to first, thank everybody for being here today. Thank all the competitors and the startups that are part of this competition. A lot of educational opportunity. That's what we've been trying to do. A lot of networking opportunity. That's what we're trying to do as well. So we have 4 webinars this week, every day at 9 a.m., followed by virtual networking right after this. So usually it depends how long David talks today. If he talks a lot, then we might be here for a while. Or if you ask a lot of questions, we might be here for a while. But regardless, as long as you're learning, we're all good. The round 1 of the competition started today, or actually really yesterday. So we will start, the judges will be receiving instructions today on how to begin scoring the competitors and their applications. And then on October 9th, we will announce the startups that make it to round 2. And round 2 would be the live judging, where the entrepreneurs would be doing a live 5-minute pitch and 5-minute Q&A in front of their respective panel or category. So that's it. Tune in for the rest of the week, and please don't forget to come into the Hio platform for the networking lounge after this. There is a password in the email I sent yesterday. You need to use a password today for the networking lounge. It will not work without the password. Again, thank you very much, David, for being here. Just give us a quick introduction about yourself, and then it's all yours.
Hey, good morning. First of all, I do not intend to keep you for that long, but I hope to spend about an hour or so, and even maybe have some time. If somebody wants to give an elevator pitch, we can all take a look at that and give some feedback. My background is from my college. When I came out of college, I was graduated with a couple of double E degrees in electromagnetic theory. I went on to get an MBA in econometrics, so I'm pretty quant. I spent my career as a tech executive working with some companies that, are fairly iconic, including Boeing, Ameritech, US Cellular, and then some smaller companies that were in the software, telematics, and cyberspace. The last 12 years, I've been with Tecos Angels. I've been an angel investor with them, and earlier this year took over as TCA Orange County president. So that's my background. I really like the intersection of technology and consumers or businesses. So I still use my engineering background, but don't ask me an engineering question because I probably will fail that stump the stars type of question. What I wanted to do today, and I like to figure out a way to make this as interactive as we can. So please put your questions in the question box or use chat. But I wanted to start off before we talk about perfect pitching and the message map. And these are just tools that you can use as you pitch to friends and family, as you pitch to an angel, as you pitch to even a VC. The difference is, you'll see where the differences lie, because I set up a system that enables you to do things in a certain way. Now, not everyone will agree with my approach, but it seems to work for many people and many of my clients, and this is what I teach them, because I also do consulting right now. So let me ask a question, and put your answers in put your answers in the chat box. It'll make it easy. What do you want to get out of a pitch? What do you want the person who you pitch to say to you? Obviously, you say, give me money, but what would you want them to to say. All right, so just put your answers in the chat box. I'll give it a couple of seconds, a minute, and see that, yeah, somebody got it, the exact words. I won't tell you which one yet. All right, so we have a next meeting. Tell me more about it. Tell me more. Wow, great and entertaining pitch. I'm not sure that's, yeah, great and entertaining doesn't necessarily get you money. Let's meet and learn more. That they understand what I said. Any others? All right. So the answer is tell me more, because the only thing that you can really control is getting your enthusiasm to get a person to be able to say, tell me more, because in 30 seconds or a minute, and elevated pitches all vary. It could be a 30-second pitch, could be a 60-second pitch, could be a 2-minute pitch, could be a 5-minute pitch, because there are all these quick pitch competitions, are all kind of different. But still, there's a core that you want to build around. And I'm going to share with you the core, and then you can add to that core depending on how much time. If you meet somebody at a cocktail party, it's doubtful they're going to listen to you for 5 minutes. But if they say, what do you do? 30-second elevator pitch will give them a good perspective on not only what you do, but what you're doing in the company that you're pitching. So the goal again is to tell me more. And everything is set up both in the pitching, in the elevator pitch, as well as when you pitch to an angel or you pitch to a VC or even to friends and family, to get them to say, tell me more. Get me to that next meeting, because then you can start peeling back the onion. So I thought it would be interesting to start with what happens, just to make sure we're level set, over a life cycle. So this is one kind of chart. I know it's kind of busy, but it shows you what happens in the life cycle of a startup, from the investigation when you get into proof of concept. And as you move from proof of concept into feasibility, development, introduction, growth, maturity, and then decline or reinvigoration or rebirth sometimes, you go from your proof of concept to your pre-seed. Pre-seed means you're really developing the feasibility. You may or may not have an MVP. You don't have a prototype. Development means that you have a prototype, an MVP is in the market. You're into what they call seed and startup funding. Then you have the early angel investors. And then you have, the early VCs, and then you have the second round, third round, on down. And then in maturity, you get taken out by a PE, you become rich, you retire on a private island living next to Larry Ellison. That's the ideal scenario that you can have. But to get there is really hard, and the probability, unfortunately, is relatively low. But when you look at the profit and you look at time, and as you can see, as you go down to the middle of the chart, your profit declines because you're spending money until you get into the market. And there's a thing called the valley of death. And this is the area where a lot of the angels and early seed investors play, which makes the investment for us really difficult. And this is where your profit is the lowest. In other words, it's the highest negative, because we haven't seen market acceptance. We haven't seen the technical acceptance. So where we in the angels get involved in the seed round, where the valley of death occurs, which makes us want to really understand the business and try to de-risk that business so we have the highest probability of success. It's said that of 10 deals that are that we look at, probably 5 or 6 will go kaput. They will basically lose all of our money. We'll see a couple to 3 deals return 1 time to maybe a couple of times our capital. And then there's 1 out of every 10 that may give us our 10x or more return. We have to bet on a lot of those 10x returns to compensate for a lot of the losses we take on the investments in other companies. So one of the things that you want to do when you not necessarily do your elevator pitch, but when you do your pitch to the VC or the angel or the friends and family is talk about how you manage risk and what you do for de-risking. And de-risking gets into things like traction. I got a letter of intent from this company that's going to buy 100,000 widgets. I have the best technical guru in the world working on this new technology. I have the 6 best orthopedic surgeons in the world attached to the best hospitals so they can do the right introductions. All those things are de-risking. But over time, as you move from the proof of concept to pre-seed to seed to early first, second, third, and fourth, you're going to find that the traction should increase. And that's what we would look for, and that's de-risking. By the way, if you have, oh yeah, somebody said it should be the valley of death. Yeah, it should be the valley of death. That's just my poor typing. This is what happens when you do spell check sometimes. But yeah, it's the valley of death. Appreciate it, Mohan. Yeah, I didn't even notice that. Interesting. Anyway, if you have a question, just type it in. Stephen, who's online, will interrupt with questions. I'll again try to make it a little more interactive. When you do the pitch, and when you go in front of an angel or a VC, you want to be able to address 5 questions. The first one: is there a market and is it growing? You want to make sure that the opportunity is fairly large. You want to get very specific and targeted because the business strategies will vary. We want to be able to understand who specifically that target is and what they look like. Is it a male with green eye shades sitting behind a desk with glasses, or is it somebody with a hard hat on the floor of a factory? Who buys? Who's going to use it? Can you make the product or service? This means, how do you put the product or service together? Is it Rube Goldberg? Do you kludge it? Do you knit it together? Do you use existing products, existing technologies? Do you have IP? And what is the value of that IP? And do you have protection? Is the product revolutionary? Or is the product something that has evolved and is a line extension from what's out there today? All those risks, because the IP, the product and the service and the IP can, in a sense, de-risk the business, or maybe the risk is high, but the potential rewards are pretty high. And those are judgments that the angels and the VCs will make. And the big issue here is, who is the real competition? We hear so many times when people pitch that there is no competition. We have the unique IP, we have this unique service, we have this unique process, we have the best people. I guarantee you that there is always competition, even if they use paper and pencil. And that is very clear. So who is the real competition? Who are you going to take? And if there's business you're taking share from, that's called share shift. There are certain marketing strategies, sales strategies you use, and there's certain other tactics that you have to put into place, versus if it's a greenfield operation where you're starting from scratch. So when Google first came out and they had their browser, the search engine, they took business away from people like Netscape. Netscape took business away from, I forgot who it was. I forgot. Anyway, there was another browser out there before. So, that's competition. But when Netscape came out, and when the first, search engines came out in the internet versus the World Wide Web, they changed fundamentally the way you do search and the way you interact. That was revolutionary. And clearly, in retrospect, that really made a difference, and that's what our world is based on today. One of the big things is, can you make money? In the 2000 era, it used to be eyeballs. How many eyeballs do you get? And it didn't make a difference what the profitability is. At least in our group, we want to understand the business model, how you will market and sell your services. What is your top line growth? How many routes to revenue do you have? In other words, Do you have, are you just doing a SaaS model? Are you doing transaction services? Are you selling consulting services? Those are potentially 3 different routes to revenue or ways you build up your revenue stream. What is your EBITDA? Because we look at EBITDA and top line revenue as a proxy for determining the valuation of your company and how much we believe it's worth when we do the investment. And especially EBITDA is used in a ongoing business when we're looking at an exit. So when you do a pitch, you're going to look at what your exit potential is, for example, and you're going to say, well, 4 companies in the same space, in the same SIC or NAICS code, were taken out by these kinds of companies. And they valued those companies at 7, 8, 9 times EBITDA or 2, 3, 4 times revenue. Each industry is different. If you're looking at biomedical where there's no EBITDA until later on, it's usually taken out at, you know, at a different, with a different mechanism, not necessarily on revenue because there is none, certainly not on EBITDA, but it's taken out on where they are relative to their total funding or where they are relative to their, you know, their success in trials. The next one is, can you support the product and service, and is it extensible? Is this a one-trick pony? And what happens when you have a problem? How are you going to support it? This is particularly true in the B2B, you know, market. So do you call a third party? Do you outsource it? When I was in the corporate world, we outsourced our customer service. We allowed second level support by our engineers. So how is your support done? That makes a difference. Is it extensible? Is this a platform where I can have multiple product lines come out of that platform? Or is it WD-40 and all you're doing is going to be able to have WD-40 and spray in a small little canister in a gallon container, and those are line extensions. So you have to be pretty clear about that. And then the most critical part is who is on your operational team and who are on your advisory boards or board of directors. Because the real key that we have seen is how do you execute the plan? Do we have confidence, excuse me, that you and your team, you being the CEO and the team will be aligned on the same strategy? And number 2, can you do a good job in execution? And that's really important. We'd like to see the CEO have some prior experience in the startup community. We'd like to see the CEO and some members of the team to have worked together because that builds the relationship and the trust. But we also want to make sure that not only the operational team is well heeled, but also the advisory board, if you have one, and I highly recommend you have one, those people on the advisory board can introduce you to the right people. So for example, there was a company that we invested in called iPorit. It makes these automated dispensers for wine and beer. You get a little bracelet, put it next to the dispenser, and it automatically tells you how many ounces you drew down and how much it costs and runs your tab. Well, with the advisory board had people that were, for example, the head of the International Restaurant Association, if there's something like that, or the head of Marriott, or the head of Mrs. Levy's restaurants. That would be a good person on the advisory board because they can make those introductions. So we're looking for not only the introductions, but we're also looking for additional skills that the operational team, especially in an early startup, may not have. Okay. Are there any questions so far? Just type them in, Stephen. If you see any, just interrupt. We'll address those too. All right. So when we look at a system for pitching, and this is one of the things that I believe very strongly in. It really consists of 4 parts. Number 1 is called context. Number 2 is called relevancy and building the relationship. Number 3 is called the story. And number 4 is a summary. The context is the elevator pitch that can stand on its own. This context, let's say I'm giving a pitch to our TCA group in Orange County. The context, and you'll see an example, says, this is what I am, this is what we do, this is how we do it, and this is why we're better than what's out there today. The second component is relevancy and relationship. When you pitch to a person that you meet in a let's say at a cocktail party, or your friends and family, or your angel investors or VCs, and you may not know the angel investor, you may not know the VC, but the goal here is to build rapport and to set the stage to make your story relevant to the listener. So let's say that I'm trying to pitch to a group called TCA, and I know that the people in the group, those people are tennis players, just for argument's sake. And let's say that a person's pitching a system that would be used for tennis clubs and golf clubs. To build the relationship, you would try to do some preliminary research and say, let's say that you own a tennis club, or let's say that you play tennis and you want to set up a match with somebody else. And let's say that their product or their service was to make the scheduling a lot easier, as well as sales of products. But that builds a relationship, because then you get people shaking their head and understanding what you're doing by putting the listener in the shoes of the person that would either buy the product or service or use the product or service. The story is the critical part. This is how you put all the other pieces together to tell the investor why this is an investable product, why the team is the right one to execute the plan, how you're going to de-risk the business for the investor. And this is where you'll use a tool which we'll share called the message map. And the summary is usually what we call free space. It's the last chart in a pitch that you would give the investor, like an angel or a VC. And this is a reminder of the reasons why this is a great opportunity. And it's usually 4 to 6 things. And it could be as simple as, we have a stellar team with the best brains in in this technology on our advisory board. We've worked together for a while. We've done 3 successful exits. We'll be cash flow positive in 3 years. We have an EBITDA of X dollars in year 4, where we'll be taken out by somebody like Amazon or Google because they bought companies like this at a 7X return. That's the way the system works, okay? So any questions to date? Yeah, again, feel free to do this. And by the way, as I go through this, and I think we'll have time, I'd like to give you the opportunity, or at least a few of you, the opportunity to at least do an elevator pitch, all right? So here's the elevator pitch. And this one is, tell me more. That's the only goal of this pitch. And you want to be able to use things like the team and the problem are the anchors of the 60 to 120 second pitch. And I use 60 to 120 because a lot of the fast pitch competitions are using that. But you can winnow it down to 30 seconds. But if you aim at 60, you can shorten it, or you can expand upon that. And you can cover some of the other items that I covered on the prior chart, with what are the couple of charts before, what are the questions you want to address. If you have a really strong team, start with the team. I've worked with this team of 4 people for the last 3 years, and we've developed, 4 startups. One of my teammates was Elon Musk, and I trained him so he is now successful with Tesla. If it weren't for me, he would not be successful. That'd be a good start. Don't know if it's true. If you have have a strong product or IP, start with the product or solution. So I've developed this really new CAR-T drug theory. It's going to be able to be used in liquid biopsies to cure blood cancers. We're the only ones out there today. We're the first, trying to get this established. We have funding right now from the NSF and from 3 major universities. Start with that point of view. And then you want to get into the elements, and this is all varied, but in general, who you are, who is the target, again, because we want to be able to see who you're actually pitching to. The more specific, the better. What is the essence of the product? What is the uniqueness and the differentiation? And what are the benefits? And then as you have time, if you can go to 1 20-second pitch or a 2-minute or 3-minute, 4-minute, 5-minute, you may want to expand upon the team, the revenue growth, the actual deal, and the exit. It's always good if you're pitching to an angel to somehow get in there. We're looking for $500,000 on a convertible note with a market cap of $4 million. We're a little flexible on that. We anticipate exit within 4 years by a major competitor. Doesn't take real long, but Mark Twain had an interesting statement at one time, or at least it was attributed to Mark Twain. He basically wrote a long letter to somebody and said, "Ma'am, I am so sorry for the length of this letter, but I didn't have the time to make it short." You have to have the time to make it short. You can within 30 seconds, 1 minute, 2 minutes, and then when you get into the actual pitch of 12 to 15 minutes, really come up with a very, very good story if you follow this approach. And it's not hard because really you're not trying to get the money necessarily. I've seen it happen, by the way, when you person pitch, a guy wrote a check for $100,000, but it's the rarity, not the norm. But what you're really trying to do is go back to tell me more. You want them to say, tell me more in the next meeting. So here's an elevator pitch example. And you can see the components that I just talked about in this elevator pitch. It goes, this is, and it's kind of made up, but it's actually based upon something we heard at TCA. My name is John, and I have a PhD in microbiology, and I've worked for the largest pharma companies. My brother, sister, and mother all have had cancer. I have a goal to help them and others fight this disease, and I won't stop until I'm successful. I developed a diagnostic test based upon a sample of blood that is unique in the market using CAR-T. Cost is less than $10 a test. Unlike other screenings and tests, you don't need a doctor's prescription. You can do it in the privacy of your own home. Tests have shown a 98% success rate on detection and can be used as a standalone or in conjunction with other lab tests. Okay? Now, you break it down. We know who John is. We know the background. We know why this is important in the passion because of his relationship with the disease in his family. We know what it is. It's a blood test using small samples of blood. By the way, when I developed this, the only thing in my mind I was thinking, it's not Theranos. It's not Theranos. So, it is not Theranos, by the way. It tells me what the benefit is. It tells me the cost. It tells me the success rate. It tells me how it can be used. And it does one other thing. It uses this term that says unlike, because now when I'm listening as a listener of this pitch, again, I'm listening as an angel, I'm listening as a VC, I'm listening as somebody you met at a cocktail party, I now can, see or hear why it's different and how it's different than something else. So it's not this, it's this. It's a really good way to frame the essence of your pitch and plant the seed in somebody's mind why you will be unique. Okay? But I'll leave it up for a second. Just take a look again, read it again, and see if you can find the essence of the pitch. The person, what business, who's the target market? Okay, target market in this case are people that want to get screened. It also could be the target market of the doctors recommending this. It talks about the competition. It talks about the unique differences, okay? And it gives you something that says, this is unlike something else that you may be familiar with out there today. Okay, so this is a very short 30-second elevator pitch. And let's say I wanted to go on and says, tell me more, just when they're talking to you. Well, let me tell you about the deal. The deal is I need $500,000 for a $4 million preferred stock deal. We have closed $100,000 so far. We're looking to close this deal in a couple of months. Tell me more. I'd like to, our advisory board consists of the top microbiologists at the University of California, San Diego Hospital, as well as in Cancer Treatments of America. Tell me more. Let me tell you about how we develop CAR T. Tell me more. Let me show you how we can de-risk the investment for you. Those are the, when you start hearing tell me more, now you can, you plan and you know by developing your own FAQs, you know, just little ways, questions they would ask and answers you would have, ways that you would be able to address their question, tell me more. And ideally they'll say, let's sit down and let me hear your pitch deck. And then you're going to be able to tell your story. So when you go to that next stage, and you want to tell your story, you want to be able to build relevancy in a relationship. You want to put the people in the shoes of the buyer, the seller. Let's say, put them in the shoes of you as the CEO. Put them in the shoes of the person buying it. People, put them in the shoes of the person using it. So if you're doing this CAR T, how many of you were touched by cancer? Either by yourself or brother and sister. That makes it very relevant to that person listening. You know, we heard a person, you know, give you the one with iPort. How many of you like to go drinking at a bar and how many don't like to wait, you know, to be served at the bar? Well, what if I have, you know, or using the words, imagine if you had a little fob that goes around your wrist and you were able to pour your own drink and get the tab automatically accumulated. That's how you build a relationship, by putting that person in the shoes of the buyer, the seller, or the user. You want to build rapport. You want to make it personal. You want to use the words such as imagine you, imagine your wife. Do you have the following problem? Can you see yourself in this situation? And what you want to be able to do to build this rapport, you may know somebody in these meetings if you go to an angel or VC, but most likely you won't. Do your homework. Look to see who's going to be in that meeting. Look at the background. Look at their interest. Look at their investment philosophy. If you're trying to sell a consumer product and the people you're pitching to basically are B2B SaaS software people, you have a little bit of a problem right there and then. You probably shouldn't be pitching. So you want to be able to not only understand the group you're pitching to, but the people who you pitch to. And if there are prior investments that these angels or these VCs have made in your company. So if they've made investments in another immunotherapy type company, that's good. Then you can start off, imagine, you know, we have this great product, we're doing immunotherapy, and I know that your company has invested or your entity has invested in similarly situated companies in the past. That puts you in a positive light. They'll understand when you do that, the risks, because they've invested in today. Make sure context from your elevator pitch is there. So when you pitch to the angels, you'll start with the context of that 30-second elevator pitch. You'll get into the next stage in front of the angel with building the relevancy, making it personal, building the rapport, using the words, imagine you, imagine your wife, do you have the following problem? And now you're into the story. Okay? Now, the story is the hard part. And this is going to be like 12, 13, 15, 18 slides, where you're going to basically tell why this is an investable product. And these are the bullet points. If you have a strong team, start with the team. If you have a strong product, start with the solution and the product, or the problem and the solution. You want to address the elements in your own style. I've seen, we can teach people what we think we should do, but my style in pitching will be different than your style. So you have to be in simpatico with the style and the tempo that you use to tell your story. Just be respectful of the time. We have people who speak quickly. We have people who speak more deliberately. If I really get really hyped up, I go back into New York 2-minute mode and I can do a 12-minute pitch in 2 minutes. Probably not really good if you're trying to explain a very difficult technical product. So make sure your pace is similar to what the pace would be on the receiving end. Practice in front of a mirror. You want to go talk about the following things. Is there a market and is it growing? Who actually buys? Who uses? What is the technology? So you'll have a slide on the market opportunity. You'll see the total market, the addressable market, and the initial market that you're going after, what they call the SOM. Can I make money? Very critical. We've seen a lot of pitches, even the applications. The business model is blank. It's like, trust us. Well, we don't. No offense. We don't know you. We want to be able to understand the business model. We trust through execution. We trust through your ability to be trustworthy by saying you'll do something and committing to do that. You put something down, we expect you to execute. So how do I make money? What is the business model? What are the routes to revenue? What is the P&L? Is this a platform? How is it extensible? Where are you going to start? What are you going to be able to add over a period of time? Where are you going to end? And then what funding do I need to help you succeed? Don't ask for too little and don't ask for too much. I know that's kind of strange and it's kind of like pablum, but the reality is you want to be able to cover any potential loss, but you also want to get enough money to have a good runway of 6 months, 8, 9, 10 months, because you don't want to go back and, with a handicap saying, hey, listen, I need more money, I ran out. You always want to be able to go back to the well, go back to the funding resources when you have money and you're successful. So when you go back for the next round, you always want to think ahead. It's like a chess game. You always want to think ahead and say, look, we've been able to do what we said we were going to do. We have this amount of revenue. We have this amount of downloads. We have this amount of customers. We have this amount of partners. We are growing too fast. We need more money to grow faster. So we need money to grow our inventory. We need money to add additional engineers. That's a good thing to have. And you go back to the existing investors, and the existing investors will more than likely want to invest again. We in TCA, half the investments we do are new, half the investments seem to be follow-on rounds. We like the follow-ons. We want to be able to be with a successful company. We also don't want to throw good money after bad. How will the team execute the plan? This is, again, I've seen many times where the execution is, well, we're going to do some social media, we're going to build some partnerships, we'll do some PR, and we'll bring in some of these partners to sell through them. That's it. Well, I need a little more detail. If it's a very intriguing product, the story up to that point was good, the revenues business model looked good, then in the next type of meeting, I'll say, I'd like to go into the details of your team, how they're going to execute, who's your sales person, who's your marketing person, and what are the major tactics are you going to use? How are you going to be able to train your third-party staff or your third-party suppliers or vendors if you're a VAR or VAD? So if I'm selling through somebody else, what's your training plan? How are you going to support them? Are you going to do sales calls together, or are you going to just sit in the background? What kind of material are you going to provide? How do you make sure that their compensation program makes sense so they'll pay attention to your product? All these are part of that execution plan, all of them part of training, and all part of the marketing, sales, and business development. Well thought out plan that you're going to be able to execute. And one of the things that I'm asking for lately, and if it's not in the original story, it should certainly be in the next meeting that you have. What are the risks and what are the impact? I'd like to understand a priori. what risks you face. Is it a risk of supply? Is it a risk of too many people selling the same product? Is it a technological risk? Is it a political risk? Is it an environmental risk? Is it an economic risk? You know, maybe it's you have the wrong product at the wrong time. Did the market pass you by? You developing, if you developed an Etzel, if you remember history books, where the Etzel was a great product, but it came out in the market 3 years late, no one bought it. So it's called the Etzel effect. Terrible thing. You know, so we want to understand what the risks are. Is it a high risk? And does it give a high impact on your business plan? And then bring it back. How would you, it's not only understanding the risk, but what would you do a priori? What is your plan to de-risk it? Maybe your de-risking is to have additional second tier vendors that are in the wings waiting to sell your product. I don't know. I mean, but this is something that you and your team and your advisory board need to be able to develop. Do you know where the landmines are that will blow up the business? We used to do red team, black team. We used to do scenario planning and have one team try to find ways to blow up the business. And that would keep us sharp in terms of what we needed to look at and what we needed to do in case something happened. So do that a priori. And then what is your exit? Who will you sell to? What will be the return to the investors? But this can be done, believe it or not, in 12 minutes. A lot of people say, don't think you can, but I really believe that you can do this in 12 minutes and do it really well. Looking at the chat box or the question box and see if there are any questions. Again, if you do have a question, I want to make this more to you for your benefit than for me. I know what I would want to hear and what I would do, but this is for you to make sure you're successful in your pitching. Now, we've talked about context, we've talked about relevancy, we talked about what we need in the story. How do we build that story? Well, there's a tool that I learned back in the late, probably early 1990s. And it was a guy named Trip Frolickson. He ran a company called Media Masters, and he taught a thing called the message map. How do you build a story? And the message map that he taught was to keep me out of trouble as an executive appearing in front of hostile groups. You can also use this message map if we have the presidential debates tonight, in developing what your message is to the American public. You'll see, but it's very useful in developing this message map as you present to an angel, a VC, a high net worth individual, or other. And it's just a simple structure to develop the story. There's a thing called the home base, and this is the center core. This is the basic message you want to get across. And I'll share with you a story on how that, what that message is about. Then there's supporting pillars, and then there's proof points. So it's very logically structured. Remember, I'm an engineer by training and a quant. This is very appealing to me. I hope it's appealing and useful to you. All right. So we have Mohan asking, in the first or second or third round, we don't know who the judges are. So how do we tell the pitch to match the background? Good question. So let me stay on that point and I'll go back to the message map. I don't know if JJ has made available what companies or what groups are participating. Take a look at the sponsors. TCA is involved as a sponsor of the competition. You know that I'm going to be, well, you may not know, but I'm going to be a judge on three of these, in three of these segments. And my background is a New Yorker. My background is investment. I invest in software. You can look me up on LinkedIn. You can look up Tech Coast Angels, go on www.techcoastangels.com. You'll see what investments we have made. You'll be able to see some of the officers in TCA. You'll be able to look at their LinkedIn. It's pretty easy to at least know from what we are. You'll also see other people. A lot of people are doing these webinars and seminars. You'll be able to see, get their names. They're probably also judges, and therefore you can tailor the pitch to them. So that would be my answer. That's what I would do if I were trying to pitch. JJ. JJ is, it's like birds of a feather. JJ is one of the investors. I don't know if he's going to be a judge per se, since it's his competition, but look at JJ's background. He's a tennis player, good guy, smiles a lot, smile when you pitch, just those things. Okay, so Stephen put in, hi Mohan, the list of judges are on our website, even better. So now you have very, very clear understanding of who they are to build this relevancy and to build this map. Okay, thanks, Stephen. All right, going back to message map. Now, this is a simple way that we can structure the story. There's a home base, basic message, supporting pillars, and proof points. The home base is also, this message map can also be used as you pitch to your board of directors. So let's say that when I was in corporate America, we did entrepreneurship. I was looking for funding for my products and services from the corporation. And this can be useful there. The basic message is this. And when you wind up in trouble and you're getting pummeled by questions, you can always reframe, it's called reframing, saying, look, let me go back down to the basic message that I want to get across today. Our product will do this for people with these benefits. In essence, it goes back to your elevator pitch. And if a person keeps pommeling you, like you'll see some of the reporters pommeling the politicians or whoever, or pommeling a CEO or other executive in a company, you always go back down to the home base. And, at a point in time, you just say, look, this is where we are. We have an impasse. Let's just go on to the next question. And that's what I've used when I've been in front of hostile crowds. Not necessarily venture capital or angels. They're not hostile. They want you to pitch and pitch well because they want to invest. But some other people may not be as kind in many ways. All right, so here's the design of the message map. Home base, pillar, proof point, and then we're going to fill it in, okay? So in this case, I constructed a company called Aardvark. And this is the home base of Aardvark. Aardvark offers 3 levels of service, scheduled, on demand, and do it yourself, from qualified and responsible suppliers at a cost less than other competitors for both users and suppliers. So it's kind of so the intimation here, it's a marketplace. I could have added Aardvark is a marketplace offering 3 levels of service, A, B, and C, from qualified suppliers, which are also useful for people who want to buy and other suppliers who want to partner. But that's in essence the home base. If that's what I'm trying to sell to an angel or a VC, that's the fundamental elevator pitch. You're going to expand it like we talked about before, okay? And then we're going to build the pillars. How do you support the story and the most important components? And what's the proof that you actually can do this? So in designing Aardvark, and again, this is just playing around with Aardvark, which is a fictitious company, but kind of based on one of my clients in the past. It was a company that was in a service marketplace, but unfortunately didn't go anywhere for a variety of reasons. So in this, the message map design, and I didn't do a build on this, so bear with me. I'll go from the upper right at 1 o'clock. So I built one pillar based upon technology. I built another pillar based upon the team. I built another pillar based upon the customer or market opportunity. And I built the final pillar 4. You can have 3 pillars, you can have 5. I like 4, it's easy to put on a page. That's the reason why I do it this way. And it doesn't mean it includes everything, but it includes the essence of your pitch, okay? And the final pillar was financials and investment. Okay, we'll go through each component in a second. But the nice thing about the message map is you can visually look at this and take it in. You can picture in your mind what this message map is and how your story will unfold. And this is important because the one thing you don't want to do to an angel or to a VC is read a pitch. Reading something is really negative. We want to hear from you. We want to understand from your heart. We want to see and hear your passion. We want to take this ride with you. You want to be able to pitch like you're talking to a friend that wants to help you be successful. Take that attitude. So in this case, in technology, I put down, we have 3 patents. We have middleware to connect to suppliers, and we have AAA, authentication, accounting, and I forgot what the other one is, and something else, but for accounting and billing, okay, called AAA. And this is what the these are the components upon which the technology is built. And then the next one is team. We started, I'm the CEO. I started a prior $1 billion company that was successful in exiting. My team consists of other operational executives. I have a CTO, a CMO with 40 years experience, and I have an advisory group that have relationships that will help us with sales. Okay, you see it's starting to build this really good story, and you start to say, is there a the technology is there, the team is there. I'll show you why I started with team in this case and technology. Then we go into customer. It's a market with $2.5 billion in revenue right now, and the CAGR is 20%. I have customer testimonials because we've had some products out there right now in test. And our competitive advantage is a combination of what we have as our people because of the experience. We have a few unique processes that we did not patent, but we're using that as trade secrets internally so we can do our job better. And of course, the other competitive advantage is the technology because we have these 3 patents, which are really able to give us the ability to interface with these third parties. So that basically tells us why we believe we'll be successful in this market opportunity and the size. And in this customer, we should probably throw in, we know the exact customers, we've dealt with them before. It's Joe in accounting with the green eye shades and the Warby Parker sunglasses or whatever. But, you start embellishing this. I keep it to 3 to 4 points. You don't have to, you can build it up from there. And the financials, which are really critical, we have EBITDA growth over 5 years. The business model yields 3 routes to revenue. We have a SaaS model, we have transactions, and we have licensing agreements. We have $500,000 in prior money. I'd probably want to ask if I'm an angel or a VC who, if you're telling me Elon Musk invested, great. If you're telling me, Mike Siegel invested, great. If you're telling me some of the other PayPal Mafia invested, great. If you're telling me, Tech Coast Angels invested, even better. We trust them. Pasadena Angels, one of the big VCs. But you see the story is being built, and I'm now with these proof points lending credibility. And I'm saying the valuation or the market cap is $3 million. So I'm looking for $500,000 on a $3 million cap. That means that it's 3 divided by 5. I'm getting about 16, 17%, equity on this deal. So this is the message map design. Okay, again, very visual, very simple, home base, tells you what the essence of it is. Again, the home base is coming right from your elevator pitch, or elevator pitch actually can be built off of this, the message map. Sometimes you start with the elevator pitch because you have this great vision and you build the message map, and then you build the message map and you go back and you fine tune and tweak your elevator pitch. Either one, some people like to start bottoms up, some people like to start top down. Me, I like to start with the vision and drive down into the details. That's just me, my personality. Finally, the summary. This is used in the pitch as a reminder of why you're investable. Now, when we in TCA look at a deal, we kind of rate the importance of the various things that I've talked about in a certain way. We believe, and let's say we give 100 points out. We look at the team and that's rated about 30 points, 30%. The market opportunity, is it a big enough market? Is it massifiable, so to speak? There's a lot of people out there that would buy your product. or is it a very boutique, small, niche market? And that may not be bad if it's a very niche market with a high ticket value, and we know exactly who's going to buy it. That's fine. And maybe it's just a product for the government, but there's a lot of people in the government that are going to buy this product for whatever reason. We still may invest, but the opportunity is number two. The product market fit goes down significantly to 15% as a weight. It's kind of interesting because when we see a lot of the CEOs that are presenting, and especially the CEO is a techie, they'll focus on this product and get really wrapped up in the weeds. We as investors may not be as technically adept. We probably are not. Therefore, what we want to understand is the essence of the technology, maybe through case studies, through applications, or through the eyes of the customer, how it would be used, or by analogy. But we don't need to get into the nitty-gritty details until we get into due diligence. Then the next one is competition, uniqueness, and sustainable advantage. Today's world, with technology moving so fast, with the internet, with the ability to build a SaaS product or a marketplace, it's kind of hard to uniquely sustain a competitive advantage. We'd like to understand the moat and the way you're going to protect it could be breached, but we do want to understand how you're going to defend your competitive advantage, either with people, with the process, with new technology. For example, Intel tries to maintain their technical advantage by looking at the next and the next generation, the two successive generations of chips. So they're always 2 generations ahead. But you notice they're not as successful in graphics and gaming. You look at people like NVIDIA do a lot better, or Avago. So, they've outflanked Intel in a different area. So things happen. What you try to also find is a unique niche or unique way you're going to get into that market with your unique profile, a unique product. What are your go-to-market plans, and then anything else? But again, fundamentally, your summary is going to be, we have a team that has done this before. We built a couple of businesses. We've had some exits. Hopefully, if you have, great. If you haven't, then look at the capabilities of the team. The opportunity, it's large, it's growing. The CAGR is really out there. We have partners that are going to help us with an advisory board that's going to make the right introductions into this opportunity. The product market fit, let me share with you, I've shared with you how this product is going to be designed, why it fits in uniquely, and how it is truly unique than what's out there today for the specific market. We're going to be putting our money into R&D and the expansion of our R&D efforts, to continue to refine our technology over time. While we have 3 patents today, we're going to be building, we have 2 more in the wings. Here are our go-to-market plans the team has been able to execute before, more than happy to go into more depth, and then anything else you want. So that's the summary. So again, I'm going to go back to this pitching to investors system. Again, just to review, context is the elevator pitch, relevancy, relationship, build how build rapport with the people you're going to pitch to, be it a friend, family, an angel, a VC. Build it using words like imagine, would you buy, or here's a consideration, have you seen your wife purchase similar things? Whatever it is, build that relationship, either by dint of who they are, their backgrounds, their investment philosophy, or by having them be a person who would be a partner, be in your company as acting as COO or CEO, or as somebody who would buy the product. But build that relationship, it'll help. And then focus on them. If you see them shaking their head, great, talk to them. It'll be infectious and contagious. And then you look at the story, build the story from the message map, and then the summary. So I'll open it up to any question you might have. Stephen, if you want to open it up or moderate them, fine. I would, be more than happy to address any and all questions, ask away. And if anyone wants to do an elevator pitch, welcome to do that as well. So whatever you guys would like to, and gals would like to do.
Thank you, David, so very much. All right, everyone, if you have any questions, okay, so we have Anthony. Hopefully, Anthony, you're going to do a pitch. That would be great. Oh, we got Ong doing a pitch too, maybe? All right, so let's bring them in and see. Go ahead, Anthony, first. You're on.
Hi, David. Thank you for your presentation. I'm not really going to do a pitch here, but I have a question for you, your opinion, because I've gone through some venture capital meetings, and I'm also, exploring angel investor. I'm on the advisory board for a startup, 8 guys, building technology for jet airplanes using computational fluid dynamics and plasma physics. This technology is going to service the airline industry.
Okay.
8 guys cannot build technology for the airline industry. It's going to have to go straight to Boeing, Airbus, etc. So basically, it's an R&D effort to exit. I wanted your opinion because, venture capital, of course, wants the EBITDA, they want the pro forma financial model, they want all that stuff. And I thought, okay, maybe angels might just make the bet. So the question I have for you really is what do you do with a company? It's a startup company, extremely competent, the team is excellently qualified. We are adhering to NASA's TRL, technology readiness level standards for development. We are at TRL 5. What do you do with an R&D effort to exit?
What do you do with the R&D?
What do you do when a company is an R&D effort to exit?
Yeah, so there are companies that will buy you even at the R&D stage. There's good news and bad news. Number one, we've seen this in the biopharma. They're always in the R&D. They'll get bought out before they even go finish the customer trials. They'll get bought out, and they want to be bought out, and the angels will invest in them that will be bought out prior. If you're in the R&D effort, I would look at, there are certain VCs that will still get involved in the R&D effort. They're probably up in the valley. If it's in the aerospace industry, I don't know how many angels will want to do that. They'd like to see a little more traction in terms of revenue. But the advantage that you also have in the R&D, especially if you can get NSF or other kind of non-dilutive funding, you can include that into your mix. So when you're in the R&D effort and you have patents, that would be something that would be saleable to somebody else. You may also find that people like Boeing or Airbus or Embraer may want to invest in your company as a strategic because they find that business to be very good for their operations or the maintenance or what, I don't know what the business is, but whatever it is. So there are people that will invest. Your goal is that are looking, R&D investments, that are looking at, early stage, that are looking pre-revenue. But the fact that you're not going to be in revenue is not really has no bearing in a sense, would be better, but you're going to be able to sell it based upon the technology and the strength of those people that are interested in those technologies.
All right, David, thank you.
JJ, you're on mute.
I know, I was on mute. Okay, thanks, Anthony, very much. Anybody who has a question or would like to pitch, please come on. Ong is next. Go ahead, Ong.
Thank you, JJ. Mr. Friedman, thank you for your time and also sharing your, slide decks. And it's quite a bit I learned in the last 45 minutes of time. I wish I had this kind of resources way earlier. But so my question is this. I know in summary page you have mentioned about, like how it's been scored as far as from the perspective of the investors. So my question is this, I've got about a little over 20 years in sales and a little bit of marketing experience, but mostly in different industry as far as, mostly pharmaceuticals industry. But what I'm trying to do, the platform is in the entertainment industry. And, as you know, I'm really in the early stage right now, trying to get a seed funding. So, looking at that, I know teams usually score about 30%. And even when I do the math, the rest of the opportunity, product, market fit, competition, go-to-market plans, I can answer all those questions. But then when it comes to team, there are things that I can control because I am basically a one-man team right now, trying to build a team around it with the C fund. So in that case, what is the kind of like a I guess ceiling or should I say baseline of percentage you're willing, from perspective of investor willing to give that 30%? Am I failing without that 30% for someone to even take a look at my business plan to even have start a conversation? If that makes sense.
Well, we hear this a lot, by the way. JJ can weigh in as well after. Don't need to hog the mic. If you're a single person that is developing a business, it's kind of hard for the angels to say, I'm going to invest in you unless you're Elon Musk or Peter Thiel or somebody. So what you need to do is find people, a co-founder, a CTO that has complementary skills, not necessarily functional, but maybe in your case, if you're in the entertainment space, skills or background in the entertainment business, and put them on your team. You also want to be able to then use this kind of message map and the elevator pitch in your presentation to potential advisors, potential executives, to build up their passion for the business that you want to build. Okay. Now, interestingly enough, I don't know if you know, I invested in a company in the entertainment space called Entertainment Oxygen. It's a platform, a network resource platform for people in the entertainment space, both above line and below line. We also know, because I did some research for them, I'm only an advisor now. I was one of their operational execs. But I also did some research from my database, and there are about 150 to 200 companies in the entertainment space. I also can use LinkedIn, join some LinkedIn groups in the entertainment space to find potential executives or find advisors. You can also join other industry associations and participate with them, get people to know you, build relationships with those people, and find maybe some of those people will be interested in joining your team. JJ, do you want to add anything? I mean, you're welcome to. Or not.
No, I think you're right. I just want to say, even Elon Musk or any of the, or Steve Jobs or whoever, they still needed a team. So regardless of how good they are and they're born with it, they still needed a team. They can't do it alone. So a team is important.
Yeah, so here's a question from Mohan. Can you highlight the differences on how one should change presentation when it is done online versus when it is done on person? It's funny. We've been in TCA, we've been online for a long time. I mean, we've always had hybrid meetings for the last few years, so we've been fortunate. We haven't seen a slowdown. The problem with online that I've seen is that people tend to sit and they kind of scrunch and they kind of talk with a lower voice, and they think because you're online, you can kind of read the document. Don't do it. What you may want to do when you present is stand up and present, or sit up straight, get that diaphragm open, look at the camera, just no different than, presenting in person, and make the presentation. We all of us have been accustomed, at least over the last 8 months, have been accustomed to doing online presentations. We do, crying out loud, maybe 10 a week, online in one form or another, either by screening, pre-screening, reviews. Haven't really seen it change very much. So when you're in COVID, after COVID, it's a little different. Now you're in front of a group, you can actually look around the room and see which person is nodding. But with the technology today, even with Zoom, you can put on, all the tiles and you can see people nodding. You can see people nodding off, actually, too. You don't want to look at them, right? But you can see people nodding And then you can look at the name underneath. You say, JJ, I see your, I see JJ, you're resonating with what I said. That's really good. Well, we can talk later. Build that relationship, and JJ will shake his head. People will see him shaking his head. And of course, we trust JJ. We know something is afoot, and we like that. So again, you just have to change the way you present. Look at the camera. Believe they're right in front of you. Make believe that camera's actually, a real person. Look at the tiles. Stand up when you present. Don't read. That's the advice that I give.
Oh, that's good. I agree. I mean, we have to adjust either way. So I really like your nod idea. So nod on regardless if it's video or in person, find out who's nodding and go talk to them afterwards. That's a great idea.
Yeah. And look at the ones who are nodding off and say, I saw you nodded off. Is there something that bored you? I mean, you could always do something strange like that.
So it could be a different nod, right? So you could be sleeping also, right?
Well, that's the one I'm thinking. Yeah, nodding off, right?
Yeah. And let's see, Lawrence asking a question. So if you've progressed since you submitted the application, I'm assuming for the competition, you're still able till midnight tonight to update it if you want to update. So you have till midnight tonight. You just need to let Stephen know or myself know, and then we will open it up for you. So just let us know, email.
Yeah, give you a hint. If you don't have a slide in there, use an extra slide. Do the elevator pitch on a slide. Because I'm a reviewer. If I get that part right, then I'll be interested in reading the rest.
There you
just
go.
A hint. That's just me. I don't know how others would feel.
No, by the way, first of all, I haven't seen you do this before, David, but I think you broke it down so nicely, and that was a really great webinar here. You really sliced it up and then put it together in a way that it's very understandable. So very, very good. Thank you so much.
See, I learned from you, JJ. You've been a good coach for me.
Yeah, thank you.
Yeah.
Anyone else with a question before we jump off to the networking? And hopefully most of you will jump into the networking session.
Yeah, I'll jump into it for a little while as well, if I can help anyone out. I really wish, just one final comment, I wish you all success. Don't be discouraged. Airbnb, Uber presented 40 times before they even got a nibble.
Yep.
The more disruptive that you are, the more people are going to not have a frame of reference. So just don't ever be discouraged. If this is what you really want to do, get your passion to show. Get people involved. And the best way to do that, find your teammates that have relevant experience that are well known. Find your advisory board. That's why team is so critical. But remember, it's not you and it's not your CEO. We'll bet on the CEO, but if you don't have the perfect experience, we'll look at the other parts of the team. And also as a CEO, I want to give you one word of caution. Don't necessarily believe you have to be CEO when this company goes forward. Get the right CEO in place. You still have the founder title, even if you're founder and CTO, or founder and chief strategist, or founder and chief architect. Don't worry about it. Worry about your business. Don't worry about the title, because titles are ethereal.
Yep. Just to, the slides will be shared with everyone that attended today. Also, the YouTube video, the video will be available on YouTube as well. If you want to access it, we'll make that available as well. Question from Dipankar. So the 15 slides, you can't go more than 15. You can be less than 15. It's just, again, to make it easier for the judges to be able to not have one presentation being 30 slides, one presentation being 5. So we could we kind of standardize it to be at least, or no more than 15, I should say. So if any of you want to update, just let Stephen or I know, and we'll open up the application for you to update it. But the deadline is midnight tonight. There is no more extension for updating anything. So
Joe, right. Look what Mohan wants you and I on the board. I know my schedule is kind of like tight. I don't have any more. I don't have any more time in my schedule for anything. But I appreciate the offer, Mohan.
Yeah, I mean the important thing too is what can we add to that board, right? We have to be the right people on to be able to be on the board. So we need to know. I don't remember, Mohan, what you do. I mean, I've been seeing a lot of applications, but I don't remember right now. But yes, it's important to really find the right person as well. All right. Well, if there are no questions or nobody wants to jump in and pitch or have an audio question, we will jump to the networking hour or the networking virtual lounge. And Stephen just put it up. Make sure that you use a Chrome or you can download the app for Hio Social, and then it's going to ask you for the link, and after the link, it will ask you for the password. So make sure that you do that. We will be jumping to the other side right now. Thank you, everyone.
See you on the dark side.
So very much.
Yeah, pleasure.
Yep.
Catch you later.
We will see you. Thanks.